wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello, good afternoon, everyone. So it's me again, Louis Lau. I will be going through with you the M Plus Wiz highlights for the week. And today itself, I think it's a lot of surprises in the market. And there are also a lot of mixed sentiment out there, which is related to Omicron, Delta Cron, or whatever COVID variant that you want to name it. But I think that is the sentiment right now. And another thing is that over the weekend, I think a lot of people are pricing in the unemployment rate in the US, and that could also affect the situation of our local front. One of the things that we are looking at is certainly the situation whereby unemployment rate is getting better, but the idea behind the interest rate hike also will be impacting the stocks markets. So for instance, if you look at what has happened recently, is that the interest rate hike path from the Fed, the tone is more hawkish. So therefore, they are pushing. Maybe they are pushing more towards 2 to 3 times, or even either higher frequency of interest rate, or they might push the interest rate quantum even higher. So, for instance, they are supposed to increase only by 0.25%, but suddenly they might be able to increase 0.5, 0.75, or even 1% in interest rate hike. So it depends on how they want to do it. But hawkish tone has been set from last the recent the Fed's recent minutes, and that is why people are moving away from technology stocks. So you can see that in Dow Jones itself, or in Wall Street itself, or in Nasdaq itself, a lot of technology stocks are being hammered down. And where are they putting the money in? So they are putting money into value stocks, or you can call it the fundamental, or not so much of growth stocks per se. So in this current situation, you can also see that if you check the KLCI movements, most of the counters here, you can see that most negative indices, right, is technology stocks. So people are also positioning themselves away from technology stocks in our local front, and they are moving into the healthcare related. You can also consider this as, people are looking into more risk averse or more conservative. Therefore, they are putting money into healthcare, because healthcare is part and parcel of to combat the current viruses. So therefore, people are thinking that, maybe maybe the fact that a lot of variants are emerging, that could also be a good catalyst for the curve counters. So that's why people are also thinking about healthcare as well. So, but another way to look at it is, people are selling off technology and move into the healthcare sector. So this is a very obvious change, or obvious switch this week and last week. So today itself is more obvious, because it has came even much lower for the technology stocks. And on the KLCI wise, I think it is quite mixed, because if you look into the situation right now here, Banking stocks definitely is value stocks. Okay, banking definitely is value. Banking definitely is the recovery tone, and Hata and also Top Glove is under the healthcare team. So all of them are under the so-called not so much of growth stocks, but they are more into value stocks. And also, if you notice that if the global front is actually moving into this potential interest rate hike environment, and that should also benefit the local banks as well, because people will also anticipate that Bank Negara will increase interest rate as well. So that will also push the banking stocks higher, which is we have seen some of the banking stocks being traded higher. CIMB 9 cents up, Hong Leong Bank 18 cents, Public Bank 1 cent, Maybank 1 cent. Hong Leong Financial Group also 8 cents up. So overall, you can see that people are shifting in terms of their funds from technology to value, or to recovery, or to whatever that you want to call it, the fundamentally solid companies. But they are moving away from the growth kind of counters. That's what we are monitoring right now. Okay, so in terms of yeah, I don't see much of a trading movements in most of the counters, but except you can see that most of the speculative counters are back in the market. For instance, all these ace market counters, SM Track, DNEX. DNEX is related to partly tech and partly oil and gas. Later on, we'll talk about it. I think more or less people are trading in the very small counters, especially below 50 cents counters, okay, overall. So that is the whole idea in the stock market right now. So where did we put our stock picks into? Okay, so given this scenario, where did we put our stock picks into? So before you go into that, maybe you can share this video out if you want to have your review on your stocks later on. You make sure you have a sharer badge on it. How do you get a sharer badge? Is to share this video out, like this video, and in order for you to your count is being reviewed later on at the Q&A section. So before we go into that, also we might want to drill down into some commodities. I think it's very interesting that commodities are uh, in a very good position, whereby wait, let me get the charts in. Okay, let me go through this. You can see that my screen here is sharing you the crude oil prices. And if you notice these crude oil prices, it has been very volatile, and it has been coming down towards 64, 65 US dollar per barrel mark. But it recently has surged above the 80 US dollar mark, and hovering above the 80 US dollar towards the 81, 82 level. So this is giving us a sign that it is very likely for commodities play to be positioned throughout this first quarter, and until perhaps second quarter itself. So commodities very likely will be in talks because of inflationary pressures. What people are saying, inflationary pressures has been creeping up. Okay, so that has contributed by this crude oil and CPO price as well. So these two are the main winners that we anticipate in this current juncture, and we should be positioning ourselves within this sector, such as the oil and gas and also plantation counters, at least for first quarter, until at least the earnings result is out by February. So that is our position for the time being. So that's why we have go through some of the selection of stocks, and drill down to what should we pick for at least this quarter, for us to win at least at a higher rate position. So this is the outlook for CPO and also crude oil prices. And let's look into our daily picks, because our daily picks will be certainly very interesting. And let me go into this chart here. Okay, before we go to that, let's talk about technology, because just now we have mentioned about technology stocks give uh, in this position here, it might not be looking as great because of the situation of the interest rate high environment. So initially, before the Fed minutes was being stated out there, we still think that there is a very good chance that technology stocks may continue to hit the 100 level here. But after the recent interest rate direction, and market perceive it as a more negative thing, you can see that it has been rejecting the EMA 50 or SMA 50, and it has pulled back on the technology stocks. So that's why I think if you want to position yourself in the technology sector, maybe not this quarter, but maybe later stage, maybe second half this year, then we can actually look at it again. But for the time being, I think there is a very good chance the commodities position will be bearing fruit for you. So what we are seeing right now here is that today itself we did put in some technology stocks. We think that there is still some chance, like for instance, Wong Engineering related to tech and related to precision engineering. It has actually break out above the 80 cents level, traded towards 82 cents. Right now is around 805. I think there could be some pullback formation further towards the 73, 74 cents level. Okay, so although we have put this in as a good structure, good uptrend in tech formation here, but I think there could be some limitations of because it is under so-called proxy towards the technology sector. So that is why I think it is good that we position ourselves in a way that if it does not it does not go in tandem with your outcome, better you have to cut loss. Okay, so in this scenario here, support is at 78.5, resistance is around 83 cents, 88 cents, and 92.5. So these are the ranges that you have to take note on Wong Engineering. Okay. The other sector that I mentioned just now is the crude oil related, which is hibiscus and also RL. You can see that we did put it in because that it is tied very tied closely with the crude oil prices. If crude oil prices is surging above 82, 83, 84, 85 towards 86 or even 100, then hibiscus has a very good chance to trade even higher. At this point of time, yes, it might not be triggering anything yet, but let's hold on our position. I mean, hold on our to wait for the thing to happen, and it needs to clear off the 85 cents level before it hits around 89.5 towards 91.5 cents level. Cut loss is around 80.5 cents level. So overall, I still anticipate that breakout should happen on hibiscus because the crude oil price is around 82, and we should monitor for further breakouts towards the upper side of the things of the chart pattern here. So 91.5 cents will be the ultimate target that we look at. For instance, if the crude oil is going up higher. Okay, so we need to link back to also the crude oil prices. And why do we choose RL? Is also same kind of catalyst. We are seeing a breakout on Friday. Today as pull back a little bit. People are still mixed whether they should continue to invest into oil and gas counters or they should invest into value stocks. So today they have picked value stocks rather than the oil and gas play. But just monitor for the crude oil price. Once it is able to break out, then the crude oil related counters, energy stocks will come back. Okay, so these are some of the counters that we have put in. NCOP is related to property counter. It has not really break out yet, but we are going to monitor for this 37.5 cents to breach, and we should be anticipating further upside, towards the 42 cents or even 44 cents level. It is forming the sideways ranging mode and monitoring for a breakout kind of pattern. So cut loss point is around 34 cents level. Okay, 34 cents will be the cut-off point. And next we have consumer related. Consumer related is very interesting because one of the idea is that this round is related to inflationary pressures first of all. Secondly, is related to consumer sector that should benefit before the festive season. And I heard, in the market itself, a lot of people are saying that, we're lacking of supply in terms of chicken and also eggs. And that is why people are stocking up all this for the Chinese New Year. So when they stock up, the prices will also go slightly higher. In terms of chicken or poultry, they have a limit into what is the ceiling price. But again, when all this, they have also premium sort of kind of poultry to be sold as well. So those might be able to sell even at a better rate. So that is why I view this as a positive trend for Leonghap International, and therefore we should be looking at a good position of breakout towards 62 cents, 64.5, or even higher towards 67 cents in the near term. I would expect the Leonghap International to continue breaking new highs in the near term due to this catalyst of inflationary pressures, and also the idea that be ahead of the festive season, people should buy more and stock up more in terms of all this material before the Chinese New Year happening. Okay. Signature Kitchen was under our list this morning. I think it should be a breakout and also pullback mode right now. It's not really hitting any range of cut loss point yet, unless it is breaking below 138. For the time being, we are still looking at this as an uptrend intact position. Maybe it has been quite steep, therefore the selling pressure or profit taking activities emerge. But overall, I still expect the uptrend position to sustain at least until the 152 or even 156 level overall. So uptrend is still there unless it is crossing below the 138 and also below the trend line. And if not, then we are still able to maintain the view that it is an uptrend intact position, and we should be looking at further upside from this point. Any pullback towards 138, I would take it as an opportunity to accumulate rather than selling off. Okay. HT Padu hasn't really break out yet strongly, but last Friday was a very interesting chart to tell us that buying volume is there, buying interest is there, and today itself is just a mild profit taking activities. I would expect continuation pattern of this range, because of the first rally is has started here, and then it pulled back towards this range, and then we should be able to see further breakouts from this point. And if there is the breakout would to continue from this 134 135 level, then the next target should be around this range of 144 towards the 160 zone. Okay, so this will be the range that we are anticipating the resistance to be at. Right now it's just the start of the new uptrend, and hopefully that this range will be the take profit zone for us to take our profits off the table. So I think there is a very very good chance that it should hit around this level and pull back. So accumulation phase should start along this level here. Let me get you this. Okay, it will be around the 127 and towards the 122 level and towards the 127 level. So that would be the range that you should be accumulating. And if there is no sell down below these levels here, then we should be anticipating further upside from this point. Okay. So I guess that would be some of the trading ideas for today. It has not been triggering a lot in terms of our stock picks. So if you have any questions, you can just put it inside the comments. Make sure you have a share badge, and I think and that will give us a good opportunity to review your stocks. So make sure you have a share badge. In order to get a share badge, you also have to share this video out and click the like button on this video. Okay. So before you go into questions, I will also go into, let's say, the traders list. What is the constituents of traders list? Is basically what we have put in on a daily basis, but once today has passed, then today's stocks will flow into traders list, and it will be there for another 5 to 7 days. Okay, so if it is there for 5 to 7 days and it is triggering some signals, then it will give us the entry level. Let's see what has given us today. Like for instance, Nova, it has a breakout, but it has formed a pullback formation. I think we have mentioned that around this period here, that it has broken out above this January level towards 107, around 98, 99 cents towards 106, 107. And today there is another triggered signal, but the triggered signal has contributed to some profit taking activities today. Yeah, so that is one of the stock ideas. KUB is another very interesting chart here. It is a very positive chart that has started to break out last week itself, I think on Wednesday, and then it has started to go up higher today itself. It is likely to continue to trend higher due to, I think, the reason behind it is also because they are related to KUB. They are related to plantation sector. So plantation is doing well, therefore KUB should be doing well as well. So looking at the target would be around 69.5. Support is around 64 cents level. Okay. Kehin is today's trading idea. Hong Leong Bank. Hong Leong Bank also under our trading idea earlier on must have put it in during this period of time over the past 6 to 7 days, and today has another breakout again. Overall, I think Hong Leong Bank has a very strong, solid move that may continue to move towards the 20 ringgit level. Okay, if you notice this long-term consolidation phase, it's around 17 to 19 level. It has been consolidating sideways, and then right now it's trying to break out. Next target will be around the 20 dollar 20 ringgit level. Okay, I think since March itself is around 11, right now it's 19, so more than 50-70% upside from that point. Okay, CIMB continued to stage a very strong movement. Earlier on, we did put it in under around the 5 ringgit and 40 cents level. So right now it's around 5 ringgit 55. Not much of movements, but at least it moved higher. Eureka has breakout again today, this morning. Right now, let's see. Yeah, it continue to surge. Yeah, uptrend position has been seen continuously since the 74 cents until 81.5. Still maintaining the view that it should continue to retest the previous high around 90 cents or 97 or even 1 ringgit zone based on several projections basis. The symmetrical triangle formation, yeah, all this are contributing to this target here 90 towards 1 ringgit zone. Okay, Hata. So Hata is also contributing to a breakout signal this morning, 9:16 a.m. You can see that 9:16 a.m. And as we mentioned earlier on, we did notice that people are shifting from the idea of putting money into technology stocks into putting money into some value stocks, defensive counters. So, for instance, this Hata is also breaking out above the 5 ringgit and 76 cents level, 5 ringgit 77 cents. It should continue to trade higher towards the 662 or even the 7 ringgit zone. Let's see how does it pan out. But overall, the downside risk is very limited for gloves or healthcare related counters. There are several reasons, and I should mention here and mention a lot of times throughout my market outlook or even the webinars that I've been conducting. So Hata or even glove counters has been going into an uptrend exponential move towards pullback, and then right now is actually near the pre-pandemic level of price range. But given the scenario that over the past 3 years they have accumulated super enormous wealth throughout this pandemic period, so which means that the company is more solid than ever, but the share price is back to pre-pandemic level. So solid balance sheet coupled with low price right now, or I would say that value has emerged kind of position and potential higher dividends going forward. I think based on these 3 points, it is very good for people to accumulate for long term, but not exponential growth kind of share price movement. So you can view this as a dividend counter rather than exponential moving, exponential move in share price going forward. Okay, so that is my view, my take on the glove counters. But Hata is one of the best amongst the top four and also the top companies in Busan, Malaysia. Okay. Coastal, I think it has been giving very strong signals early on. Last week itself, it has signaled us to put in under the our traders, our daily picks, and I think it's on this day itself it has rallied strongly, and right now it's still uptrend intact position, still above the EMA 5 level, forming the sideways consolidation phase. So we are monitoring for maybe a pullback and then a breakout mode from this point until maybe 2 ringgit or even higher towards 250 in the longer term perspective. Okay. And CIMB we have talked before. We have BIMB here. Okay, BIMB is also same similar pattern under the value or even the recovery team stocks or whatever you want to call it, but it is certainly a well uptrend move. Sorry, this is CIMB. Okay, BIMB is also same thing, same similar pattern here, uptrend move. So it has actually breakout above the 280 early on after the restructuring of activities. You know, all this Takafu being unloaded out of this BIMB, or BIMB right now is only bank, and this has actually contributed to breakout above 280, and right now it's above 3. And I still expect the banking stocks to have a very good recovery tone going into 2022. So next target will be around the 328. So there is no fundamental change towards bank Islam right now. Just that earlier on there is some sell down because of the restructuring activities, but overall we should anticipate that to turn out to be a much better move going forward. Okay, so these are some of the traders lists and also daily picks for this session. And I will just take a few questions because there are only a handful of questions that has been coming in with Share batch. So earlier on, we did mention about NCOP. This viewer is also asking about NCOP and also Sedania. So NCOP, like I mentioned earlier on, I should repeat this again. It is hovering just sideways and forming a sideways consolidation phase around this 33 towards 37 cents level, and we are anticipating the breakout to happen, but it's still in a gestation period, so we are going to monitor for a breakout above 37.5. Next target is around 42 towards 45 cents. Support is located around 33.5 cents level. Okay, so this is the view, and my view is that downside risk is limited, and it should continue its upward move from this point once there is a breakout above 37.5. Okay, another question has been posted here is Sedania. And Sedania, I think there is a very, very good opportunity because it has been hovering again around this level here, which is around 46, 47 cents level. And this is a good opportunity because I think it has been forming the breakout, pullback, and sideways consolidation phase. So this pullback rebound and pullback and also this consolidation phase has started since July until right now. So it's more than 6 months, and it is forming a good support near to 46, 47 cents level. So one thing that we're going to monitor here is that definitely this is a breakout, pull back and hitting the support range, and going to have a very good potential breakout again in the near term. Okay, so whereabouts that we are going to monitor for breakout is by today or this week or following week. If there is a breakout above the 55 cents level, then we should be taking note on this kind of movements towards the 66 or even 73.5 cents level. So overall, I expect this Sedania to improve from this forward. Downside risk is limited towards around the 47 cents level. So if you want to accumulate the counter, I think you can accumulate around 47 cents, or you can actually anticipate the to break out above 55 cents, then accumulate above that 55 cents. Then it will be more secured, and I would say that the breakout, if comes in with a very good genuine volumes, then that should give you a signal for buying on the breakout, and your risk should be limited towards 47 cents level. Okay, so that would be some of the question asked by the viewers. Yep, I don't see any. Oh yeah, there's another question coming in. I'll take this two questions here again. So on this SNC, SNC has been turning sideways and hitting the support range around the 50.5 cents level, rebounded above and break out above the 57 cents level. So given this situation scenario here, I'm expecting this to just making a just sideways ranging mode within the 50.5 cents towards 67 cents level. So right now it has just surpassed the 57 cents level. So in this scenario here, we are going to monitor for the breakout or extension of the upward trend towards 67 cents, and people should take profit around 67 cents level. So SNC itself, it is just moving sideways. 50.5 cents is the cut loss point. If it comes back below, and below this level is a cut loss point. But if you want to accumulate along this 50.5 cents, I think it's a valid move as well. And we are going to monitor for the price movement either move sideways and then recover towards the 67 cents level. That is your take profit zone. But if you want to hold on to it, yes, you may hold on to it, but make sure you have sold partially and move your target higher. So if it is able to break out above the 67 cents level, where is the next target? I would say that it would be near towards the 83 cents level, because the zone, so the earlier zone, the sideways ranging mode is around uh, at least 14 cents level, 14 cents level. And from this 14 cents level, I think it should head towards 82 cents level. So that is how you project your target for SNC at this current point of time. Okay, so last one would be DNO. Again, I think DNO is similar to the technology stocks. So bear in mind, I think at this point of time, we shall avoid first until we can see a very good decent rebound phase in the technology stocks or technology index. Then only we are able to see further upside. At this point of time, the downside risk is higher, greater than uh, the rest of the sectors, because we are anticipated to go into an interest rate hike environment. So in that situation, people will sell off technology stocks and move into fundamental or value stocks. So that is why I think that is very important to take note. Okay. Another question I think earlier on I missed out is my news. People ask whether this is a value stock. I would say that this is more towards a recovery team play. And during the MCO period, it has been hitting their financials and unable to see a very good recovery or breakout. You can see that the share price has been continuing to turn lower due to that situation, because MCO has dampened their earnings. People are not really buying in the buying groceries from miners, but instead they're buying from other places such as Giant Grocer, Tesco. Okay, so given that scenario, miners just as a convenience store is just only able to tap with the recovery team, but not so-called value stocks. So basically, we still need to see a very strong position of the rebound or around the 76 cents level in order for us to give us a very good opportunity towards the 90.5 cents level. So right now it's in the downtrend mode. I don't think that this is a value stock, and given the scenario that fundamentals are still on the recovering path, I think there should be some selling pressure in the near term rather than a buying interest coming in uh, going forward. So I think we should be avoiding until we are seeing some substantial support near towards 76 cents or even lower. Okay, so that will be some of the questions that being asked by the viewers. So in summary, let's look into the charts here. So let's look into the chart on FBM KLCI as a summary to give you an understanding of where am I looking at. So I think KLCI stocks has a lot of room to go because of they are more towards value and fundamental and driven, and therefore we should be anticipating further upside for FBM KLCI. Support is around 1530. I still anticipate that KLCI should continue to go higher towards the 1600 level. So that is my personal view on FBM KLCI. The other part of things is small cap index. Small cap index is still on the recovery path. Earlier on, we did mention that it has broken above this 15,500 points, and right now it's near to 16,000 level. The next target that I'm looking at will be around this zone, 16,400 points. I would say that the extension of the rebound should continue towards this level before it reverses. So let's see over the next 1 week itself, 1 to 2 weeks, and let's see whether does it pan out in that manner. But for instance, right now it's already in the positive range on the DMI indicator. So whenever there is a crossing of DMI above the DMI positive above negative, I should continue to monitor until it has formed this signal here. The red is above the blue. Then only we are going to say that it is on the ending path of the recovery trend. But for now, the blue is above the red, and therefore that should bode well for the current position on the stock market, because small cap index will cover around 600 to 700 counters in the stock market. So I think there should be a lot of improvements to go for small cap index going forward, and I think your portfolio should be able to turn at least neutral to positive at least for another next 1 to 2 weeks period based on this indicator point of view. Okay, so that should sum up the today's session, and I hope that you have a good trading day ahead, and also hopefully that you have a good trading until the Chinese New Year period. And uh, that's about it for today. I will see you again next week, and thank you so much for tuning in to our M Plus Quiz highlights. Thank you so much, and goodbye.